Yeah, we live. Give everybody a few minutes to tap in. This is how the market was behaving today. The Bulls and the Bears was dancing. It was like,
So what, I wanna hang with my friends. So what, I wanna go out again. So what, I wanna write you.
hope y'all at home, wherever you're checking this out, dancing in your seat. Because that's how the Bulls and the Bears was dancing today. But only one of them won. We'll get into it in a couple seconds. Let me know where you're tapping in from. That's how the Bulls was. Bring the comments up. Maria, welcome to the party. My man Keith, welcome to the party. X Gamer 10, welcome to the live stream. Toronto, Ontario in the building. What's up? Osmond checking in from New York. Fit for Counseling, Texas. Deborah Perkins, what's up, girl? Elijah Everett, welcome to the live stream. Classy P, welcome to the party. Tiffany Griffin in the building. Keith B from Texas. Stan checking in from Atlanta. YouTube is showing up in the building. Welcome to the party. Drenton Knowles, welcome to the party. Classy P from Gilbert, Arizona. All right, let's talk about what's going on in the market today. It's been a very interesting day, and we're going to be talking about put options specifically in this live stream. And I saw some things happening in the market, and I said, let's go live. Let's talk about it with the general public and talk about what's going on and why it's so important to be able to use put options. Man, everybody checking in. Bruce Young in the building. Doug Tolliver. Hold on, let me go back to the comments real quick. You know, XLM, Bruce Young, Doug Tolliver, Good Drugs Farm, Olga, Wanda, Terry, Sharon from New York, Kevin. So welcome to the live stream, everybody. All right, so let's pull up. First of all, I want to pull up. I don't know, how do I want to do this tonight? I want to pull up some charts and I want to draw some things out and walk you through what I'm seeing in the market and what you should be paying attention to. But before we do that, let's talk about what everybody's favorite thing is in the market typically. So if you are a stock market trader, investor at all, for the most part, most investors, when you look at a chart, let's just call this, boom, a stock chart. And down here you have time, and then over here you have price in this pane right here. And most people are only familiar with buying something low, right? And then they hope over time that they can sell high. That's what most people hope that they can do. Now, what is the problem with this? Well, there's two problems. Problem number one is that, what is problem number one, Jason Brown? You guessed it. Problem number one is that the market doesn't always go higher. So that's problem number one, is that, yes, that is wishful thinking, but the stock market doesn't always go higher. So that's problem number one. What do you do when the market moves the other three ways? And if you've never thought about it like this, I want to really just expand your mind and explain to you why having put options in your arsenal is super important. Because if you think about it, the market can move three ways. The second way that the market can move is sideways, right? So it's kind of like it did this. It started right here. And then the market pretty much ended right here in the same spot over time, right? It kind of went down, went up, went down, kind of went back up, but ended up being in the same spot. And then the third way that the market can move is it can start right here at the same spot, and then it could just continuously go down, and it could end right here, right? And so you got three different scenarios. So I like to look at the stock market as a math game. If you think about it, there's three different ways that the market can move. So out of those three ways, this is 1/3 of the way it can move. This is 1/3 of the way the market can move. And this is 1/3 of the way that the market can move. Now, I know a lot of people aren't mathematicians, but I'm going to do some real quick math for you. If you only know how to make money from the market going higher, then there is a 2/3 chance that you will be wrong about the direction, because you only, or should I say, not be wrong about the direction, but you only know how to make money 1/3 of the different ways that the market can move. Now, if you break that down to a percentage, if no one's ever taught you this before, this is 33%. So what else does that mean, Jason Brown? That means 66% of the time, you will either be wrong about the direction of the market, or when it moves those other two ways, you have no game plan. You have no way that you can make money. And so therefore, that is why most people lose money, because then they have to get good at one thing, which is buying low and selling high. And how good are most people at picking the best time to buy and the best time to sell, and getting in at the lowest time and buying at the highest time? Can I get an amen? Most people, all right, most people are really good at buying high and actually selling low. That is what most people are really good at. And so they're not good at picking the lowest risk time to buy and selling at the absolute high. So when you put it into a percentage, thank you. I got an amen in there. My man X Gamer is alive in the building. Kevin Ray can say amen. And so when you put that into perspective with trading, I want you to know that it's not your fault when people say stuff like, I've tried something like this before, I can't seem to make money, the market seems to go against me. Soon as I buy it, it goes the opposite way. That may be true, but if you knew how to make money off the opposite way, then all you would do is just reverse what you're doing and start buying put options, and then you can make money every time you buy and the market goes against you. But most people don't know how to do that. So I want to look at some charts. I want to break down how to spot it in the chart. And then I also want to look at a real live put option example today. I'll show you a real live put option example. My good man Mel is in the building. What's up, Mel? Let me add Mel to the broadcast. There it is. Boom. My good man Mel Abraham. Welcome to the party, brother. I hope all is going well your way. So let's get back to the chart. So let's look at some real live charts, because people say, well, Jason Brown, can you actually predict when the market is going down? I don't want to say I can predict, but I can look at a chart and tell with a high probability which way that I believe the market is going. All right. And so when you look at the chart like this, let's just take this out of here. And if you don't know what you're looking at a candlestick chart of the SPY, which represents the S&P 500. So take a look at the S&P 500. What does this chart tell you? It tells you that every time the S&P 500 gets up here, that I shouldn't say every time, in more recent times, starting since about mid-July. All right. We got mid, write the word mid here. Since about mid-July, that every time the market gets to this area, it doesn't like it. Whether that's because of high interest rates, because of the Russian-Ukraine war, between the Israel and Palestine war, or terrorist attacks that Hamas, whatever you want to call it, the market is like, I don't really like what I'm seeing right now. And so we get a sell-off. So when the market ran back up here to about this 435 area, how do I know it's 435? For my people who don't read stock charts, you can see right there. If I take a dashed line and put it right over here to 435, somebody tell me what happened. I will tell you. That's right. That animal right there, the bears, just kind of came out with their claws and just ate the bull's lunch, right? So the bears smacked the market down. And so right here, we were looking at this, and this was one of the things we posted in our elite um, program with our members. Like, hey, look, we think the market's turning based on the technical analysis. And what happened? Smackdown, smackdown, smackdown. Now, this isn't the most important part right here. Well, this is, I should say, this is part of the most important part, because you have to understand how to read stock charts and determine the best time to buy and sell. Now, the second most important part that I want to talk to you about is, how do you make money from that? Because most people are like, whoa, first of all, I didn't even know that you could look at a chart and determine that the trend has changed and stocks are going down. Well, welcome to Power Trades University. Now you know. Second part, though, is for most people, the last month or few weeks, they just are like, I don't even want to look at my account. The stock market is down. Oh, this is why I don't like looking at it. And if you've been looking at the market today, oh, it was no better, ladies and gentlemen. Let's just take a look. And my prediction is that it won't be much better tomorrow. I think we go lower. Here's why. Let's take a look at some of the action or the news. You can see right here, Biden asked Congress for $16 billion. Okay, we always spending some money that we don't have. Facebook says Middle East war is hurting ad spending. Now let's take a look at what that equated to, because Facebook announced earnings today. So can we look at our good friends Meta? Yeah, if you haven't been paying attention, Meta fell $13 during the regular session, and then they fell another $10 in after hours. That is a total of a negative $23 drop in one day. Now, could that drop have been avoided if you own the stock? Let's take a look at Meta stock. I'm going to say the answer is yes, because why? What do you see here, ladies and gentlemen? Well, if you knew what you were looking at, then you wouldn't be on this live stream, or maybe you do know what you're looking at if you're a Power Trades University student. But nevertheless, whoever you are, I want to help you out. What you see here is Meta in an uptrend, and then it hit its head at this level. That's called resistance. And then Meta ran up again, hit its head at this level resistance. Now, that is a signal to me that Facebook is running out of bullish steam. It's running out of steam to the upside. Does that make sense? Where's my sound effects? Make sure people are paying attention. That's the DJ horn. Make sure y'all ain't falling asleep on me tonight. All right. So Facebook ran up to this level and it hit its head. It's like, that's the whip being cracked, telling you to pay attention, my friends. So it hit its head twice. And what did Meta start to do? It started to roll over. So it rolled over, sold off from $320 to $299. And then I just told you after hours is down another $10. So Facebook effectively, if the market were not closed in the open, it would be somewhere in this area right now, and it'll probably sell off a little bit more. And so you could have seen that coming, but you also could have potentially profited from this stock rolling over. Well, you're like, well, Jason Brown, maybe Meta is a one-off situation. Maybe, and maybe not. Let's look at our good friends Google. Okay, Google, or AKA Google. You could see something very similar happening here on Google. Very similar. Not quite similar, but very similar. You get a nice bullish run on the Googles, and then boom, sell off. You get a run back up to this area, and boom, you get a sell off on the Googles. All right. So this is not good news for some of these tech stocks, but more importantly, are you paying attention to when this stuff happens, and A, how you could be taking profit and closing out trades in your account, or B, let's talk about how to make money. Now, before I talk about making money, let me know. Give me something in the comments. Y'all want to learn how to make money with this stuff? Give me like a heck yeah. Give me something. Let me know. Do y'all want to know how to potentially make money from this? Because you're like, okay, Jason Brown, this is cool. It's good stuff. Never really heard anybody break it down like that before. I know. You're welcome. That is why we are here. But let's talk. I'm here to shine the light on you, my good people, and break down how it all works. Gregory says yes. Maria says heck yeah. X Gamer. It's at least over 100 of y'all on here. I want to see a flood of heck yes. so we can drop this knowledge, this information. I'm gonna go inside my real account, show you a real potential trade that I'm in. Not a potential trade, it's a real trade that I'm in. So if I get a bunch of heck yes and let's do it, we will do it. All right, we getting there. Stan got the eyeballs. Elijah says, let's go. Dante said, let's go. Q says, H, yeah. Mel says, let's do it. Q says, amen. A blank says, heck yeah. Shanita. Keith B. All right, okay. Y'all feeling me? Y'all awake? Okay. Let's talk about how to get to the cash register and get this money. All right. So let me show you guys a strategy that I'm using. Mr. Rodney Campbell, welcome to the party. All right. Let me show you a strategy that I'm using. So I started off by saying you need to learn how put options work. So that's exactly what I'm going to share with you in this quick little live stream session. So if we know that the market, let's go back to the S&P 500 or the SPY. If we know that the market is going down, what we can do is buy what's called a put option. And when we buy a put option, as the market falls, we actually make money. So I'm going to take you inside my real account, which I don't do often, but sometimes, I don't know, I'm feeling a little spicy. We make it happen. So let's take a look at my real account, and I'm going to show you the SPY. Now, I'm going to show you, this is inside the real boy, so I got to be careful. But if you come down here and you look, let me plus it up for those people with bad eyes in the back. You can see down here, I own 435 put option. Actually, I own 100, at the 435 strike price. So I own 100 put option contracts at the 435 strike price. Now, some of you are like, what does that mean, Jason Brown? I am going to show you what that means in mathematical terms. Now, I paid about $15 for them, and they're trading at about $18. So I'm up about $3 or something like that right now. So, but how does it work? All right. So I'm going to walk you through. I'm going to make the math. Okay. So remember, I own the 435s, and I paid about $15, I think, and 50 cents for them. So let's make the math. All right. So remember, 435, I paid about $15 for them. Let's get into a little bit of mathematics. I'm going to show you how this works. So if you look at the 435, so first of all, where is 435? Well, here's 436. So let's go ahead and draw a little bit of a dotted line. We're going to church, or should I say stock market school tonight. But if you feel like saying amen, I will accept that as well. So let's go to stock market school tonight. All right. We got the dash line straight across here, straight across here, straight across here, straight across here. Okay. So you can see 435 would be right under 436. So this is 435. All right. My girl Maria hit me with the amen. That's enough for me to bring it on to the live stream. Thank you, Maria. I appreciate that. All right. So here's what we're going to do. We know where 435 is at. So I own the 435 put. How much did I pay for the 435 put? I paid $15. So I'm going to draw this out for people to understand. So I own the 435 strike price put. This is how we teach inside the course too, but we're going to draw it out for you here tonight. I paid $15 per contract. So I paid $15. Now, I'll break down how much that really means. I paid $15 per contract, which means I got a lot of firepower in this trade. But I want to do it just like this first. So I own the 435. I paid $15 for it. So you have to subtract 15 from this, and what you get is what's called your break even, because I need the stock to fall in order to break even and make money. So I break even at, I'm going to draw this out for you guys. So I break even at 420. Does that make sense? I break even at 420. So if the market falls to 420, I break even because I pay $15. Well, the market fell to 417.55. So everything below 420, I start making money. Now, let me switch over to here real quick. After hours, the market is down to 415.17. So if the market is at 415.17, let's go back. 415.17 is where? Let's go down here and draw it out. 415.17 is just a little bit below 416. Everybody agrees on that. So this is where the market is at right now after hours. Okay. So I'm going to put current. I'm going to put current price. Right. Redman said, Coach, given the options explain course. I really am kind of teaching the course right here, right now, at least a portion of the course. But you know what? It's not just about having the course. It's also about understanding when to apply it, which is where the coaching and all that stuff comes in. So I don't mind giving away the game. It's more about learning how to use it, when to use it, and how to make money. And I think this is going to help a lot of people, right? So let's help some people. And what I love about helping is that helping you doesn't make or break me. I'm going to make money no matter what from the stock market. So it's kind of a win-win situation. I'm not incentivized to hold anything back. Only thing is I like to get compensated from my time. So I don't just spend all my time teaching free stuff on YouTube. But here we go. So nonetheless, current price is let's go back. Current price as of after hours, 415.72. All right. So the current price is 415.72. So 415.72 is current price. Well, I told you I break even at 420. So now let's do the math and say how much money did I make? Because if I break even at 420 and it's at 415.72, let me pull up the calculator. And you say 420 minus 415.72. It's $4.28, right? So I am up $4.28. Now, for people who don't understand math, I just told you I have 100 contracts. So I'm going to leave that right there. And we're going to walk through what that math looks like, all right? And I just bought this trade today. So that means within 24 hours, I'm up this much money. So I'll walk you through it. So I paid $15 for 100 contracts. 100 contracts controls 100 shares. So you got times that by 100. So anybody who understands math means I got about $150,000 in this trade. I am up $4.28. So I am up 428. So 428 times 100 contracts times $100 equals $42,800. That means if the market were open right now and I just said, you know what, get me out of this trade, I'm done, I'd be up $42,800. Now, let's take this math a little bit further. Does anybody know how to calculate percent return? If you don't, I'm going to show you right now. So what is my percent return? Let's do that down here. Let's do percent return. So your percent return is calculated by total cash you can pull out, 42,800, total profit divided by how much you had to put up. So I had to put up $150,000. So let's do that together. So let's bring this over here. So let's go 42,800 divided by 150,000. And you times that by 100 for converted for a percent. So that would be 28.5%. So this would equal 28.5%. Well, here's the beautiful thing is I entered that trade today. So that would be 28.5% in 24 hours. Just by being able to read the charts. Because I saw this little fake bounce and then it kind of started to fail. And I thought, yep, we're going to roll over again. And so, but I went right here because that's where it hit resistance. So just by being able to read the charts, come in, take a calculated risk, we're able to throw up a 28.5% return. So put up 150 grand, if the market were open right now, I can close out at 42,800. Now, this is considered after hours. So we hope that the market holds up or holds down, I should say, by the time we open tomorrow. I actually hope the market opens up even further down because all it'll do is help me make even more money from the stock dropping. And so this is super powerful stuff. So let me pause for a second. Let's take questions, comments, thoughts, because this is why we do the, hold on, give the bear some music, baby. He like, you know, this is where this, right? This is what we call partying with the bears, baby. All right, I'm tripping. All right. So thoughts, questions, comments, because this is why put options are so important. Matter of fact, if you don't follow me on Instagram, make sure you check me out on the gram at Brown Report so you can get a lot of behind the scenes action. But thoughts, comments, questions, because this is, you know, I feel like it's so powerful to help people. You look at the market, you got UAW members that are striking, trying to get a raise. You got inflation, you got high interest rates, you got all this stuff going on in the world. And most people don't know that you can really create your own reality. You can print this type of money and put yourself in a position where you could pay cash for a car. I mean, that's somebody's college tuition that you can pay for. That's definitely some groceries. That's a down payment on the house. Now, here's the thing. By the way, I'm going to put my number up here as well. You can always send me direct text messages to my phone. Yes, that is my real number. I do not accept phone calls at that number, but I do accept text messages at that number. But here's the thing that's important about this industry, this game, is that some people will see this and they will be like, you know, but I don't have $150,000. Don't focus on how much I had in the trade. Focus on the percent return. It was a 28% return. So if you had $1,000, you would be up $280. If you had $10,000, you'd be up $2,800. So it's all about the percent return, not about saying like, oh, I didn't have $150,000. I know that most people don't have $150K. At one point in my trading career, I didn't have that kind of money. But when I understood the power of the stock market and what you could do, I was just talking about this at our live seminar. I did everything I could to grow my account. This is what motivated me to not go out on dates when I was single. This is what motivated me not to blow all my money shopping on shoes and clothes. This is what motivated me to work a second job or move up the corporate ladder. I was just like, how do I get $150,000? How do I get that type of money in my account? So that way, when I see the opportunities and I jump on it, I make money that is super meaningful for me and my family someday. And that's the power of what I'm sharing with you here. So again, let me bring the comments up. I see a couple of the comments coming in. Let me scroll up and let's take a few of these. Elijah Wan says, you to go. I received that, brother. Thank you. Arnold, Coach JB, I think you should be up more than 28% since you still have time on the trade. I didn't want to get into that, Arnold. Yes, I'll probably be up more than 20% because the trade don't expire to November 17th. But, you know, they got to get the course to understand all that. We can't just, it's just too much to teach, right? I mean, it's hours of modules in the course. Yes, there's a little bit more to it than that. You're right. I'll probably be up more than the 28%, but I'll be up minimum 28% as long as the market holds right here when we open. Maria says, I got how to get in the trade. How do you get out? The same way that you get in is how you get out. So I bought to open put options. I'm going to sell to close my put options, Maria. So you exit the opposite of how you got in. So if you bought to get in, you're going to sell to get out. Hope that makes sense. Redmond says the UAW reached a tentative deal today. It's tentative. They still got to vote on it. And they only reached a deal with Ford, not GM and Stellantis or Chrysler. So, you know, whatever with that. The bottom line is the market can pay you more than you can strike for, right? I made a 28% return in one day. They're on strike trying to make a 28% return in a year. But when you learn this skill, And I'm rooting for the UAW. I hope they get paid if that's what they want to do. I'm just saying, when you can take matters into your own hand, you kind of like, it don't matter if Ford or GM or Chrysler pay me or not. I got the ability to produce my own 28% return in a day, not in a year, working on an assembly line or working in a plant. Although we appreciate those people because we need those cars to be made. I like the Escalade. I don't own one, but I like it. So I get it. I'm just showing you the power of having your money being able to work hard for you as well. Meredith says, what's your target expiration date on the puts? That's a November 17th put. So we got until November 17th. Most likely won't hold it that long. Tomorrow, if we open down and then we fall, 3-4 more points, most likely we'll take my profit and run. So that's that. James says, congrats. Do you have a stop loss in place? I do not have a stop loss in place. I technically don't feel like I need one because I'm already up in the trade and then it fell after hours. So I don't know what would turn the market around and have it pop up in the morning. Although anything could happen, I'm not worried about having a stop loss in place. I don't really plan on holding this past tomorrow, to be honest. If we tank and fall down tomorrow, I'll close this out. I'll probably be doing another video of how I made, hopefully $60,000, $80,000 in 24 hours would be a sweet video to make. And you're getting a preview of how we made at least 42,000 of it. So if the market falls another $4, this may turn into an $80,000 day. We'll see. You never count your chickens before it hatches. The market, anything could happen overnight. That could be positive news that could uplift the market. I just don't see that happen after Meta. They didn't celebrate their earnings. Amazon sold off. Google sold off. Tech stocks are getting hammered. We got two wars. We got inflation. We got the Fed looking like they're going to raise interest rates one more time, minimum. There's nothing about that says let's come in and buy a lot of stocks. But again, you never know. Dave, practice what you preach, coach. Take the profit. That's right. You never go broke taking a profit. Y'all see the shirt? That's my goal tomorrow. Amari says, you ever get a sign? No, I'll be closing this trade out before they ever think about assigning me. So Brian says, I'm on it. AIG put from you teaching me, coach, reading the charts. Good stuff. So ladies and gentlemen, that's what I wanted to come on and share with you tonight. I was like, I'm feeling it. I also just got back from YouTube Black in Atlanta, and I was like, I'm committing to going live on YouTube more, dropping more videos, although we're broadcasting to LinkedIn and Facebook as well. I just want to show up more, give more information, help more people. And the best thing you could do to return the favor is, smash the like button, hit the subscribe button, and share this video with somebody who needs to understand why put options are important. Share this video with someone who the market is down and they're scared to look at their account right now. Just let them know that there is hope. There are other things that they can do. They could be partying. Get a bear some music. Should we give them some music? They could be partying with the. They could do the bear dance. All right, no, but for real, they could be partying with me and the bear. So again, follow me on Instagram. If you don't follow me, check me out there to get some of the behind the scenes stuff that we talk about. And then last but not least, one more time for your mind, you can actually text me. That's my real number. It'll come directly to my cell phone. If you like this, got a question, or just like, man, how did you do that again? You can shoot me a text. Send this video to somebody who need to know what's possible. And I don't know about y'all, but I'm finna go to sleep because I can't wait to wake up tomorrow and see what my put options are doing in the morning. So happy trading. Thanks for tapping in with me tonight.